Welcome to Markets Now. I'm Michelle Rook along with Darren Frye, Water Street Solutions. And Friday's close is mostly higher except for those nearby hog futures. And Darren, let's talk a little bit about soybeans first of all in terms of the report. Kind of bullish on both the quarterly stocks as well as that acreage figure not coming in as big as expected. And so we got pretty good market reaction. Do you think we're going to continue to be able to push that market?
Yeah, you'd think so, especially given the inventory report. If we don't push it higher and we keep moving into new highs, then I'd be concerned. Any closes under 1490 for the soybeans, under 650 for the corn, those are respective of the May contract. That would pose a problem for the bullish side. But they got enough fodder today. I would think that beans are going to be supported well. Corn will only be drugged down by poor wheat fundamentals and new crop corn.
Yeah, it was nice to see us get above the 100-day moving average on old crop beans as well as that $15 mark. When we dig into the report, now as far as the acreage figure and quarterly stocks, let's talk about quarterly stocks first off. What does this mean for our ending stocks number, our final ending stocks number? How much snugger are we? Are we below 200 million bushels now?
Oh yeah, you definitely. If they come out and say we're not, I don't know what they're doing with math. We'd have to be in that 160 to 185 range, somewhere in there would be my guess on the April WASDE. Obviously, we know we've been exporting a lot more beans here, but also you got to wonder how big the crop was last year. Was it 49 and a half or something less than that or less acres, because inventories were much tighter. In fact, 250 million bushels tighter than a year ago, this same report.
You bet. Corn, quarterly stocks on face value were actually a little bit bullish and friendly as well, kind of confirmed what we knew about the cash prices being so strong out in the country, didn't it?
Yeah, it sure did. Those spreads have been strong for some time. They've been a little confusing because we've seen weakness in old crop contracts, yet the spreads continue to gain while we are headed lower, in like the May contracts of both corn and beans. So today gave us the information and why those spreads were so strong. And so we should see them supported here until we know more about new crop. We're going to have to get this crop planted. We're going to have to get the crop off to a good start. If that is the case, then I would say the old crop will relax. But until then, you'll keep a bit under it, I would say.
Right. And when we look at the acreage figure on face value, it looks pretty bearish at 92 million acres. But the big increase, one of the big increases came in North Dakota, I think up like 27% in terms of plantings, and they're under a couple of feet of snow. So that kind of throws some cold water on that, doesn't it?
Yeah, it really depends. If they'd get some warm weather, I hear the ground is less froze in Minnesota and South Dakota than people would think because of the snow cover. But if they would get some warm weather and it would melt off, it's really how much flooding we get in the Red River Valley, right? And a lot of PP can come if that water can't get away. And so a lot of increase in soybean and corn production up in the North Dakota area. And we are going to have a late spring up there. There's no question about it.
So what do you think from a price perspective here? Again, we've got corn kind of running up into chart resistance, and now that old crop is kind of the leader. Is it going to pull new crop along with it, or do we just rectify that with spreads, or what happens?
Well, I think it'll be an active spread trade, but I tell you, if the weather, we got to watch the weather. If we start planning with some exuberance here, from the south coming north, and then it does warm up, and the northwest snowpack melts off, and they're going to get going by May 5th, May 10th. We could see new crop actually pull old crop down. But if we have weather, really be, hard on getting the planters to the field, getting some acres in the ground, then I would say that old crop's going to pull that new crop up.
And give me your thoughts on wheat, because there really wasn't anything bullish in the report, either on quarterly stocks or especially acreage for that market, was there?
No, the total acreage number was up, but, we're going to continue to see Kansas City gain on Chicago, I think, even though we're at record high levels. And Minneapolis the same. Minneapolis has a story of can they get their spring wheat planted? And, of course, Kansas City, the drought's still alive. So I think that's more of a spread game, but there's really nothing bullish in the wheat market overall when you take a look at what happened with EU earlier this week. And we saw that they came out with some ending stocks that were much bigger, about 7 million metric tons, and lowered their exports. And there's just not immediate concern now. The corridor is flowing again, and the EU has more stocks. So I think that's kind of a dead market right now. But maybe the spreads continue to strengthen.
Yeah, and I was wondering about that because Chicago is so far under Kansas City right now, and that just keeps widening. It's like historically wide now, isn't it?
It is $1.79 was the old high, and I think
Wow.
we've just surpassed that, and we just continue to see that market gain, and it makes sense from a fundamental standpoint. When you look at abandonment, could be as much as 35% out in the Kansas City crop, so that's a huge deal when you think about that was what it was last year, and I think yield trends could even be lower this year. So.
Yeah. I was going to ask you about abandonment because that HRW number looks like it's too high at this point, doesn't it?
Yeah, it does. It
Yeah.
does. I'm looking at 35% abandonment and probably a yield trend that's 5 to 10% below the normal trend line yield. And so when you take those two figures together, hard red winter wheat might gain some more on the soft red winter.
Okay. Meantime, let's talk about cattle. New contract highs in both live and feeder cattle futures. We got pushed by sharply higher cash trade this week. And so what's your outlook? The last time you and I talked, you were kind of bearish cattle.
Yeah, I still know that we're going to top at some point, but obviously here a few weeks back I got less bearish just because of the charts and what was going on. And of course we pushed into new highs, April being the strongest, June the next strongest. I do think that we have to go higher, maybe another $2 or $3, but I'm still looking for a seasonal top at some point. We just haven't gotten there yet. Fundamentals are really strong, but just like any market, high prices cure high prices. I just don't know where that is yet.
Right. And maybe we should talk just a little bit about cotton because we did get the confirmation of the 2.5 million acres of less acres in the report today. But what do you see for the overall cotton price going forward? Because the market doesn't seem to care here about these lower acres.
No, it really doesn't. The charts are pointing down, but they really got close to a turning point this week. And if they get a little higher, I'd have to start looking up. But as long as they hold this resistance area, and that really is just a few cents higher than here, then we have to keep looking down. And hogs are that same way. Hogs probably need to go higher given that there wasn't a lot on the hog and pig report. And because it wasn't bearish like everybody's expecting and we've broken so hard, you would think they'd be supported here. But overall, I think the trend is down, and I think rallies are for selling in that market, no different than cotton.
Gotcha. All right. Thanks so much for joining us, Darren Frye, Water Street
Thanks for having me.
Solutions. And that's Markets Now.